This presentation is entitled Easy Technical Analysis, 80% of the benefit with 20% of the work. Technical analysis can be really scary and complex, but if you focus on the pieces of technical analysis that matter the most, I think you can get a lot of benefit from it. Remember, everything we talk about in this presentation is for educational purposes only. There's never a recommendation to buy or sell anything, and you can read the full disclosure at stockmarketinsurancetrader.com. So here's a chart that shows you some of the examples of what you can find in technical analysis, and this is full of all sorts of stuff. It's got support and resistance and volume and McClellan oscillators and Ichimoku Haiku clouds, and you name it, there's a pile of stuff on there, and I don't think you need 90% of that. So what I'm going to do in this presentation is talk about just a handful of the most important elements. We're going to talk about trending, support and resistance, and within support and resistance we're going to talk about horizontal support and resistance, trend lines, and moving averages. And then I'm going to wrap up with a look at a stock market pattern, how you can look at charts and see patterns of movement, and those patterns of movement tend to resolve in certain ways, and so you can do a little bit of predicting the future with that. So we'll talk about some of those things. In the world of technical analysis, one of the things that you can often do is watch for trending. Watch to see if you see higher highs or higher lows. For example, if we look at this green arrow, right here, that points to the low part of this area, and we see we went up and we came back down, and the low of that area was higher. That was a higher low. And also, if we go from this point, we see we get to a higher high. This high in this pattern was higher than that point right there. If we come over here, if we look at this point right here, the low of this area of the chart, and then compare it to that, we've got a higher low, and then we've got another higher low. Likewise, in this trend, we've got a high there, and then we've got a higher high. So watching for higher lows and higher highs makes for a pretty good way to predict where trends are going. Support and resistance are two concepts that are important to understand. Support is a price level that tends to inhibit a downtrend. For example, if a stock is falling in price, at some point people will look at that and say, man, this is a deal at this price, I'm going to start buying. And that place where people start buying tends to be the same place that they started buying last month or the month before that. Resistance is the opposite. At some point, a price level goes up enough that people say, man, this isn't going up any further. I better cash out my money now and go find a different stock because I've made all the money I can make out of this thing. So that price point up there tends to be a price where they said that before. It's kind of if Apple could only get to 650 and then it's trying again to 650, people will look back to last year and say, it never got above 650, I'm selling now. So that's what resistance is kind of like. An interesting phenomenon, if you have a price level that is resistance, if eventually you break through that point, that price level will be support. And the opposite is true. If you have a support level and the stock falls through it and tries to get back up, that same level will become resistance. So we'll look at support and resistance. In this chart, if we look at point 4 right here, we see the stock went up to a certain point right about there, 207 or so, and it fell back down. So people are going to remember that 207 level was a key point, and we come back to here to 0.5, and we see that the stock price fell to pretty much the same level. Old resistance at 0.4 became support at 0.5. Likewise, after this big gap on earnings, the stock price went up and settled right around 230, and that point became resistance there, and so the stock went up to 230 and fell back down. It went up to 230 and fell back down. Even over here, 2 months later, it went up to 230 and fell back down. And then if we go another month out, we had broken through resistance, and when we fell back down to that same 230 point, and then again at that point. So you see how a price level becomes resistance, and then it turns around and becomes support a couple of times. Likewise, we see the stock fell down to 0.6, and that level at about 213 became the support level again 2 months later at 0.7. So that's how support and resistance works. What you do is you find places where the stock went up and fell back down and draw a line there. And you find a place where stock came down and stopped and wandered around, and so you draw a line there. And so if you draw some of these lines, it will give you a feeling for where the stock might move in the future. In the previous chart, we talked about horizontal support and resistance. There's also a phenomenon of diagonal support and resistance, and we see examples of that all the time. Here we have the bottom of this trend here, and we see if we follow this purple line here, we can connect the line from that dot to that dot, and that point predicts this point. And if we draw a line from this same point down here to this point, that same point will predict that point. And likewise, if we draw a line from this top here to the top of the next peak there, that point predicted that point. So while the diagonal support or the trend line support is not as strong and robust as horizontal and vertical resistance, it is something that you should take care and watch a little bit, because sometime it'll give you an indication that a stock has fallen down as far as it might, and then it has a good chance of turning back the other way. Moving averages provide another level of support on occasion, and I've drawn some blue arrows here. The blue line here is the 5-day moving average. It's the average of the previous 5 days close, and we see that the stock price fell to the blue line there. It started at the blue line and it fell again to the blue line. So there's a little bit of 5-day moving average support there. There's also this purple line which goes through here, which is the 200-day moving average, and you see where the two moving averages combine. That's a good point to watch out for that. Likewise, this big white candle here came up and hit the red line and it quit there. Over here, the blue line is kind of guiding this price action upward like that. So some of these moving averages, it's not as strong as horizontal and support and resistance, but often you'll find that moving averages tend to inhibit price movement. We see it again here as we fell down. We fell down right to the green line, which is the 50-day moving average. So draw those lines on your charts as well and keep track of those. Sometimes it will give you a little bit of guidance. One of the things that you can do with the horizontal and trend line resistance is combine them together into a pattern. Here we see a pattern, and in this pattern we have, this is called a flag, a bull flag or a pennant or a triangle pattern. It goes by different names. But here we see we've got a flagpole, and this flagpole goes up to this about 238 level. And you see that there's horizontal resistance to this point right here, and we'll draw, that's where we're looking right there. We've got horizontal from the top of the flagpole that point right there, and again that point right there. That draws this horizontal line. And then on the bottom side, we go to the bottom of this big candle to that point, to that point, to that point. And so we've got a diagonal line coming up here. And what happens often in these patterns is, since there's ascending price action on the bottom and there's a cap, this baby's going to blow at some point, and you can't stay inside that triangle forever, and it will tend to blow. It'll fall out of the top or the bottom of this triangle pattern. Typically, when the bottom of the triangle is moving up like that, the resolution of this pattern will be that we'll pop out of the top, and again the horizontal line will become support as we move forward. And that's exactly what you saw in this pattern here on Amazon. Okay, that's a quick summary of my view of easy technical analysis. Again, there's lots more to technical analysis that you might want to look at, but I wanted to give you a flavor of some of the most important topics in technical analysis so you could get 80% of the benefit with only 20% of the work. For more information, come see me at sminsurancetrader.com.